Let's continue on with what you'll have to identify in order to set up this trade. So we're talking about capitalizing on what amounts to a trend-to-trend transition. Now think for a moment how the market behaves, and I won't say typically, because really, is there a typical day in the market? You know, we know that there's often going to be movement that will take a market higher, transition it into some sort of sideways market, and then take the market lower. Or it might go higher, transition, and then go higher again. But we usually have, the one that kind of remains a constant is this movement from a trend to some sort of non-trending market. That's somewhat of a constant. What's a little less common is what we're talking about right now. But it does happen in the market. This is part of the behavioral cycle, which means that we must have a way to capitalize on that type of price movement. And that's what we're talking about here. How do you capitalize on the price movement that takes us from trend to trend? I don't care if it's up to down or down to up, it's trend to trend. Let's talk about the psychological environment, though, that this will happen in most often. When the market is on edge, it does not want to find balance. What is balance? It's a sideways market, whether that be accumulation, which is very balanced, or whether it be distribution, which is somewhat balanced. But balance also accompanies a no opinion type market. In other words, there's not an overwhelming opinion, because opinion creates imbalance. And that's what a trend is. It's imbalance. Think about the way balance of supply and demand works. So when the market is on edge, it's not uncommon to see us just go from one end to the other. It's not uncommon to see price action basically jump from one type of price action, underlying price action environment to another, and avoid and basically skip over that non-trending market cycle. I call it a quick transition or a short cycle. Quick transition meaning we're getting a very quick adjustment in psychology, or short cycle. You know, if I expect normal cycles, I hate the word normal, but if we expect a normal cycle to be trend to non-trend, a quick cycle or a short cycle is basically when we jump that sideways market. We're not getting that at all. Okay? So that's the environment that we're trying to take advantage of, and the psychology, again, that accompanies it is a psychology of a market on edge. When you're on edge, you're either going to be bullish or bearish, speaking about your market participation. When you're on edge, you're very seldom neutral, which could we dare call it a certain amount of calm. A sideways market certainly can embody some calmness, or at least no opinion. So on edge usually means a fairly drastic shift of opinion. A few things we're going to need to set this trade up. Obviously, one is our 34 EMA wave. The other is our MACD histogram. So remember, if you recall, I mentioned we were going to need that at some point. And so for that, you can download the IBFX MACD traditional. You'll have that right down here. I'm most interested in the histogram, by the way. I'm not interested in the moving average crosses, but rather just the bars of the histogram and where they are in relation to the zero line that cuts them in half. So in terms of setting this up, let's talk about a little bit of background. If I'm expecting volatility in a kind of trend-to-trend reversal, I'm expecting there to be at least some sort of established opinion that is shifting. So if I want there to be follow-through, if I want there to be a fairly dramatic amount of movement in the opposite direction, the direction in which I'm going to take the trend, I would like the preceding movement, whether that be an up or down trend. It has to be a trend, okay? So I would like that preceding movement, either that 12 to 2 o'clock wave or that 4 to 6 o'clock wave, be on par, be comparable to the past movement in the market within our market cycle. Within our market look back. Let me say that again. So if my market look back on the 4-hour chart's 4 to 6 weeks, maybe getting up to 2 months, no more than that really. And I want to see if this current movement lower is on par with what's happened prior to now in terms of the trend, would I call that downtrend on par with this uptrend or this uptrend? Yeah, it's on par, if not maybe a little bit larger. So it's at least comparable in size and in sentiment to the past moves. This keeps me out of taking this market cycle when the market's just kind of bouncing around in a wide range. We don't want to get into these types of reversal scenarios when the market's just simply in a very wide distribution range. Okay, because what you really want to do in a wide distribution range is not play momentum, but rather play the exhaustion at the floor and the ceiling. So this rule, again, keeps us from simply engaging a wide distribution. So we have our MACD, and we have our 34 EMA wave, and then we have the understanding of what the preceding market environment means to whether or not I will consider whether the current trend is sufficient enough to even set up this wave reversal entry. So let's continue on to what the exact entry is, because the entry itself, once you've done this homework, once you've made sure that you've set it up in the proper environment, the actual entry itself is very simple. So let's discuss that.